Welcome to the Real P&L Trading Show, where every week I show you my real accounts, each one tied to a specific trading system, so you can see exactly how every strategy performs in real time. I also answer all your questions live, and I trade my safe wheel system right here on the stream, so you can actually learn by watching me do it. Now, real quick, let me clarify something because I know, we have some new people here joining every week. So when you hear me talk about the safe wheel or the AMP 122 or the PL5 or the earnings edge, here's exactly how they all fit together. The safe wheel. This is for anyone who wants to understand what the AMP, all market profit style strategy, is in the simplest possible form. It shows you the core principles: be systematic, be hedged, and protect your capital. The AMP 122 book, you can see that here behind me. This teaches the actual framework behind all those systems. Always be hedged, always non-directional, always rules-based. And this is the blueprint that everything is built on. It's the all market profits framework. Now the PL5 or the PL5 Pro, this is the professional, fully developed version of that framework. It's the advanced rules-based system for traders with meaningful capital who want consistent risk-adjusted returns with lower drawdown. And finally, the earnings edge. I also talk about my earnings edge strategy. It still follows the AMP framework, just applied in a faster earnings-focused way that uses discounted options or controlled leverage. Right. So let's go ahead and get started here. I'm assuming that all my tech is working. You hear me, you can see me. And the first thing, post any questions you might have, right? Post those sooner rather than later, because sometimes I get to the end of the broadcast and I don't get to your questions. I want to answer all your questions. All right, let's start with the earnings edge. What happened with the earnings edge? You can see my account here. All right, so I placed a trade with General Electric, GE, made $664. Since I updated to the 3.0 version, which was the beginning of 2025, my record is 24 wins, 3 losses, 1 break even. I have an 85% win rate. My average win is 1,093, average loss $901. And you can see in 2022 how it did. 63% versus the market was down 20. Then 2023 up 17%, the market was up 24. Then 2024 was actually down 36%, the market was up 23. That's when I realized I needed to make a change, and I did an update. And then you can see 2025 up 321%, and the market was up 16.47, and I'm using SPY. And in 2026, let's see how we're doing. You can see my account that I've traded GE and TSM. You can see I'm up $2,592, and my net lick is 28,035. So let's put that in here, 28,035. 28,035. And what's SPY trading? SPY is trading at 693.10, up from last week. So far in 2026, let's see if I can make this right. So far in 2026, I'm up 9.91%. The market's up 1.64%. On overall, since 2022, since I started trading the earnings edge, I'm up 460%. The market's up around 46%. Earnings edge is doing quite well, and doing quite well so far in 2026. Okay, so that's the earnings edge. Let's talk about the PL5 Pro. Let's go to that particular account. And I think it's this one here. Yes, 471,334. 471,334. Okay, 471,334. So I'm up a little bit from last week. 471,334. And you can see so far 0.17%, so not even 1%, pretty much at break even so far with the PL5 Pro. Market's up 1.64. And you can see the PL5 Pro, it started on June 1st, 2025. This is a 3.0, up 16%. The market was up 16. So overall, we're running together 16.18 versus 17.92. So I'm trailing just a little bit, maybe 1 or 2%. But remember, my drawdowns are going to be about half that of the S&P 500. So on a risk-adjusted basis, I'm outperforming. That's the PL5 Pro. Let's talk about the PL5. This is the PL5 version. It's a variant that I run. I run it with the S&P. It's strongly correlated to the S&P. And I can't show you my whole account or the whole thing here. I'll show my account number. The amount in this interactive broker's account is 37,351. 37,351. You're seeing my actual result, 37,351 on a net liquidation basis. And how is this thing doing? So I started this on July 16th, 2024. So middle of 2024, the PL5 did 10.2. The market was up 3.94 from the middle of 2024 to the end of 24. Then in 2025, it did 11.9 and the market was up 16.47. And so far it's up 0.93. The market's up 1.64. So overall, since implementing this PL5 program with the variant that I'm running, it's up 24.5%. The market's up 21%. So it is outperforming the market nominally. And on a risk adjusted basis, those are pretty equal because this will draw down with the market. It's got pretty much the same numbers as the market in terms of drawdowns and in terms of volatility. So it is outperforming a little bit there, okay, which is what I would expect. I expect both systems to outperform the S&P. Otherwise, I wouldn't trade them, right? Okay. Now let's talk about the safe wheel. That's this account here. Looks like I've been trading Intel, right? And I have 6171, how much is in the account, 6171. So I'm up from last week. And you can see the safe wheel 2022, I was up 21%. The market was down 19. 2023 did 5%. The market was up 24, underperformed there. 2024 down 14%, and the market was up 23. So, you know, underperformed there. And then last year I did 5.5 and the market's up 16.4. So underperformed there, but here we are in 2026 and the safe wheel is actually up 6.7%. And the market's up 1.64. So I'm outperforming in 2026 with the safe wheel. Overall from 2022, I'm up 23%, market's up 45. So on a risk adjusted basis, because the volatility is about half that of the S&P approximately on a risk adjusted basis, we're pretty even, around 45, 46%. So that's how the safe wheel is performing. And let me move this over here because I'm actually going to trade the safe wheel. In fact, every trade except for long calls that I buy on Friday for $5. Take that out of here, out of that. If you take that out, I've traded every single trade right here live. Every trade's been made live in this account since 2022. So you've seen me trade this thing, every single trade that I've made. All right, now what's going on? I'm trading Intel and I don't own any shares. So let's talk about this put hedge here. I have three questions I ask myself in order to know that the put hedge is actually what I want it to be or whether I need to change it. Number one question, do I own 200 shares? No, because if I did, I would see if it's paid off, which I don't, so there's no. The other question is it close enough to Intel's price? Well, I don't know. Maybe, maybe not, but here's another one. Am I under 100 days left in the life of this trade? The answer is yes, I do need to move this. Okay, it's time to move this put hedge. Now, when I move a put hedge, that means I'm going to start the cycle over. So this is the end of this cycle. Now, if I'm going to start a new cycle, I need to take into account the price of my underlying, which is at $45. Meaning, would I start over with this stock because I'm starting a new cycle? No, because it's not within $20 and $40. It doesn't meet the criteria. I'm not going to trade this. Okay, so starting my new cycle over, I'm not going to use Intel. Now, the reason why I have this list here, these are potential stocks that I could trade the safe wheel with. And, you know, when I put them there, they're close to $30 because I like to get them as close to $30 as I can. This one obviously doesn't, I can't use it at $64 or right? So, and $94 for this one. So some of them are qualified, some of them aren't, as a new, in terms of picking a new stock. But first thing I'm going to do is I'm going to exit out of everything here, not this $6 thing, the long that I buy. I'm not gonna mess with that. I'm not gonna try to sell that. I don't really care. It's $5, $6. But this put hedge here, I'm gonna sell this, and I'm gonna get out of Intel completely. It's the first thing I'm gonna do. Then I'm gonna pick a new stock. So I'm gonna hit closing order. Mid price is 39, so maybe I can get $39 for this put hedge. It's done its job. I'm done with it. Okay, so I'm filled there. So now I am pretty much out of Intel. I'm not in Intel anymore. And I'm going to go to, I'm gonna actually pick SoFi. How did I pick SoFi, right? Well, first of all, I find stocks that are close to $30 and meet these criteria here. So here is, by the way, I'm going to show you something from the course. And this thing from the course is the list that you use to pick a stock for the safe wheel. And if you are interested in the course, it's actually available for free right now. You just hit the link in the description and you can get the whole course for free. So this thing that I'm showing you now, you can get this for free. It's part of the course. So how to pick the stock. So I want to make sure it's between $23 and $37. Okay, SoFi is trading around 27. Also, I want to check to see if there's enough premium. I want to make sure that I can go out of the money with SoFi here. I can go into, let me make sure SoFi is picked here. Okay, I can go into the nearest expiration, the one that's going to expire at the end of the week, and I can collect enough premium out of the money. So out of the money would be 26.50 is out of the money. I want to get at least 26 cents. I can actually get 26 cents or more all the way out to 27.50. So I can, or on the put side, I can get out of the money and I can get more than 26 or 27 cents out of the money. So that qualifies there. I want to make sure I have high liquidity. I want to have less than 3 cents on the bid-ask spreads. When we get into these, that's a 1 cent spread, 1 cent spread, 1 cent spread, 46, that's a 2 cent spread. Okay, good liquidity. Check the earnings. I want to make sure earnings aren't coming up next week. So I'll go to the chart and you can see the earnings are going to be coming up at the end of the month. That's fine. I'm okay with that. The hedge costs, I want to make sure. So I'm going to be looking for something around the 130 to 200 DTE, closest to 150. And I'm going to buy something around 80%. Okay, so let's go to that expiration cycle, closest to 150 to 157. And then I'm going to look at these puts because they're going to be one of my put hedges. And I want to make sure they're not over $4, and they're not. And then I'm probably going to be around that, I don't know, 20 or 22 mark, but because it's going to be at 80%. So they're not around over $4. And then also the final filter is make sure that when you want to buy your put hedge that there's enough strikes available. I mean, if there was only like the 20 and the 30 strike, there's not enough strikes available to kind of get you close enough to where you want to be. Okay. So that's all the filters. So this stock SoFi, this is the guy. This is the one I'm going with. Why do I pick them over another one, PINS or PFE or any of these at $30 JD? I could have picked JD. If that fits all these criteria. No problem. It's not like I like SoFi better than JD. It doesn't matter if I think it's going to go up or I think the stock's going to go down. Or that's not an issue here. It's only if it fits through the filters. SoFi fits through the filters. I'm going to use it. Okay. So first thing I'm going to do is I'm going to find out what's around 80% of the current price. So 25.50 is the current price. 25.5 times 0.8, because that's where I want to put my hedge. So higher than that. So probably the 22 strike. This is the one. I would buy the 21, but it's not available. So I'm going to buy the 22 and I'm going to buy 3 of these. So let's get the put hedge on. Okay. 213. is the mid price is 209. So I'll just start there. I'm not gonna fight the tape. I'm not gonna fight it. Okay. So guys just got filled there. 209. Okay, so now my put hedge is in order, is in line. I would need to buy a long call to protect this hedge. So I'm going to do that next. I'm going to do it here at this expiration cycle. I'm going to buy the call around $5 through this one right here. I'll pay $6 if I need to. I'll try to get it for $5. And I'm going to do one of these, right? So because I'm trading between $5,000 and $10,000, I'm going to do 3 put hedges, and I'm going to do 1 contract on all my other contracts, including when I run the wheel. But this one here, it's going to be $6. That's fine. I'll pay 6. I won't pay 7. So this is the call. Should fill. Okay, so now I have my hedges in place. Now I'm going to run the traditional wheel with SoFi, and I'm going to run it at the end, that expires here at the end of the week. And what I'm going to do is I'm going to get at least 26, 27 cents. This is where I can get at least 26, 27 cents right here. And then I'll go one back towards the money. I like to go one back towards the money and sell that one, as long as it's still out of the money, of course. And it is. So mid price is 44. I'm going to do one of these. Okay, so now that's filled. Now I have my full position on. Okay, so that was a little bit of a lot, but it was going through quite a bit. But it kind of gets you from start to finish on how to pick a stock, and then where do you go from there, starting all over. All right, I'm sure there's going to be some questions today. Let's see. Neil says, I'm first. Yes, you are. Scott, how you doing? And Neil says, the sound's good. The video's good. I appreciate you letting me know that. Avery says, hit the like button. If you like that I share my Real P&L, and I want other instructors to share their Real P&L. If you hit the like button, it helps promote this video, and then it gets the word out. And if you agree with my philosophy of, if you're going to sell a course and you're going to claim that you're profitable, you should share your P&L. You should share your net liquidation on a consistent basis. And you should also show that you don't secretly add money to the account. So every month you'll see my equity curve, and you'll see that I don't add money to these accounts. Steven, training, is the Earnings Edge training available? Not right now. There's a waiting list. There's a link in the description. You can get on the wait list for that. Mary says, I was putting on a safe wheel trade to Intel, but when I got to the call, there's nothing under 10 cents. Do I wait till one becomes available? No, I would probably pay the 10 cents. I'd pay the $10. I'd pay an extra $5 for it. I would always want to stay hedged. I would always want to hedge my hedge. I would do that. I would pay it. Now, if you're starting a new cycle, right, like I was, you would not get back into Intel. So even if you're in Intel right now and you really only have a put hedge on, you want to wait for that put hedge to kind of run its course, and you'll be ready to get into a different stock like I just did. Hoping to hear about how to enter the PL5 training this Saturday. There is a link in the description of this video and all of my videos that I've done in the last couple months where you can get into that training. There's a link that talks about the PL5 and in the description, and you can get into the training. It's coming up on Saturday at 9 a.m. Pacific time this Saturday. It's going to be the first time that I've talked about any training on the PL5 Pro for, I think it's been 8 months or a year. I mean, it's been a long time since I've delved back into the training on the PL5 Pro. I haven't made that available for a long time. So it is, the training is coming up here this Saturday, which is 5-6 days. GH says that INTC earnings are next week. Okay, well that's good. That's why it's cost so much for that long call, but you're probably collecting really good premium when you're selling um, your puts or selling your covered calls, or you're getting really far out of the money. And so there's a lot of potential there. That's what happened with Intel. Let's look at the Intel real quick. Intel this year up $389. And the reason is because I sold that call. I owned 100 shares and I sold the call real far out of the money. Still collect a decent premium. And I got assigned last week. So I got pulled out of my shares. But I think SoFi or Intel was trading around $38, $39, $40. And I got pulled out of my shares around 42.50, I think. So that's where the profit is made a lot in this safe wheel. So that's a good thing to get assigned and then pulled away from your shares and doing it while you're hedged. That's the key, right? You're hedged. Conrad says, did you update the safe wheel since 25? No, I haven't changed anything. I think the safe wheel is still in version 1. If I remember correctly, I never, there's no version 2 or version 3. I haven't updated it. It's been the same, which is good. This is more. What do you think? What would you do if you're stuck in a wheel using another person's system and it is way underwater? I probably would have cut my losses before you're way underwater. Now that you're stuck way underwater, I don't know what you do. You can't do anything. You can hold and hope, hold and hope. That's the reason why I don't like the traditional wheel strategies, because you can't really do anything. If I knew of something you could do, I probably would be trading the traditional wheel, but I don't. So therefore, I don't know what you can do there. You can just hold and hope, and your capital is just going to be tied up, and there's nothing really you can do. Happy Tannenbaum says, how is your performance of the PL5? Well, I went over that. The PL5, actually the PL5 Pro, this is more the one that I'm going to be doing training on. Started this particular system, 3.0 system. I updated it June 1st, 2025, up 16% at the end of 2025. And then just at break even this year. So I'm up 16.1%. I'm up $65,000 in nominal terms. I started with around 405, 406,000. I'm up to 471. So that's how the 3.0 is doing since the beginning of the 3.0. Avery says, hit the like button. Yes, please. I would appreciate if you hit the like button. Let's see here. Edict says, can you explain the safe wheel? Yeah, I think I kind of explained it. And why you chose those strike prices. Okay. So the strike price that I chose was the 26, right? Let's see, make sure. Yeah, the 26 put. Why did I choose? That's what you're asking, the actual wheel portion of it? Because I wanted to get at least 27 cents. I found where I could get 27 cents, and then I went one back from there to collect a little more premium than that 27 cents. And still, I wanted to make sure I was out of the money when I did that. So that's how I do it, because it gives me a little more buffer, right? So let's say that the stock goes down below 26 and I get assigned. Well, that's closer to my hedge. So I like to be away from the money as far as I can and collect premium at the same time, and collect decent premium at the same time. So I hope that answers your question about that. Scott says, looks like I'm the only one that hit the like button. Maybe no one else knows where it is. Thanks, Scott. Yeah, the like button's just right down below the video there. I'd appreciate it if you guys hit the like button. That would help out a lot. Okay. Let's see if there's any other questions or comments. Make sure you get those in before the end of the broadcast. I typically get questions and comments right as I'm kind of ending the broadcast, and I sometimes I don't get to them, but I don't see anything there. So one thing I always like to say, if the P&L is not real, what else are they trying to conceal? I'll be back next week. I appreciate you guys. Next week it will be on Tuesday, by the way. We'll see you then.